Hello and Assalamualaikum. Firstly, my name is Danisha Fikara binti Muhammad Zain and my numerator is 291734. In this video, our group represent is about understanding the duplicate entity in a financial analysis. Okay. The definition of the duplicate entity is a tool used for financial analysis, a breakdown of a company's return on equity (ROE) into three parts: profits margin, asset turnover, and financial leverage. It helps a financial manager focus on a key performance metric individually, revealing strength and weakness. Investor can compare operationally efficiency between two comparable firms. The duplicate entity corporation first used in 1920. Component of the duplicate entity is a profit margin, a measure of operating efficiency calculated by dividing net income by sales. Asset turnover is a measure how well a company generates revenue from its asset calculated by dividing sales by average total asset. And financial leverage is a measure how much of a company asset are financed by equity calculated by dividing average total asset by average equity. And the relationship ROE is profit margin times asset turnover times equity multiplier. It is a formula for ROE. The ROE show how return on equity are influenced by these three components. Okay, the next slide is about a background of the selected companies of our group. Our group select QS Group Berhad and RM Berhad. QS Group Berhad is an investment holding company that is specialized in manufacturing, distribution and provision of engineering service for inspections, testing, measuring, analytical and automated handling equipment. It was incorporated in Malaysia on 21 October 2009 and listed on 8 March. It has a strong presence in Asian countries and serves diverse market segments such as semiconductor, automotive, electrical and electronics, petrochemical, research and development, metal and mining, environment and renewable energy. RM Berhad is a Malaysia-based investment holding company that is listed on the main market of Bursa Malaysia. Securities Berhad is mainly involved in the manufacturing and marketing of aluminium billets, which are used for various industrial applications such as automotive, construction, and electrical. It also has a property development segment that focuses on residential and commercial projects. The company was founded in 1996 and has its headquarters in Selangor, Malaysia. It has a market capitalization of about 93.6 million as of December 2023.
Hi and a very good evening. My name is Nurhani Nadira, matrix number 293329, and as we all are aware, there are three key components of a DuPont identity, which is profit margin, asset turnover, and equity multiplier. So in addition to this information, there are also three more elements to this, which is profitability, efficiency, and also leverage. In terms of profitability, the DuPont highlights the significance of the profit margin component, which assess how efficiently a company converts revenue into profit. And a higher profit margin indicates better profitability, showcasing the company's ability to control costs and generate earnings from its operation. And the second element is efficiency, and it refers to the components that contribute to the company's overall efficiency in generating return on equity or ROE. So the two key elements that involved in the efficiency elements is asset turnover ratio and equity multiplier. And the asset turnover ratio measures how effectively a company utilizes its asset to generate revenue, emphasizing operational efficiency. And this indicates that a higher asset turnover suggests a better efficiency in asset utilization. The last element of a DuPont identity that I will explain is the leverage element. So the leverage element refers to the equity multiplier, which is one of the components in DuPont identity, and it measures the financial leverage employed by a company to enhance its return on equity or ROE. So the ratio that we get from the equity multiplier indicates the leverage of the DuPont identity and reflects the extent to which a company relies on that to finance its assets. So that thing is called leverage. So that's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Shafi bin Abdullah. My number metric is 285414. Today I will be explain about the application, analysis and discussions about capital structure decision, investment decision, working capital decision, market capitalization value, profitability, and DuPont identity. So first, we go to the calculation each component of the ratio analysis by following the above table number 1 with DuPont identity, profitability, efficiency, and leverage. So we move to total debt ratio and equity multiply, long-term debt ratio, time interest earned, cash coverage, and debt to equity ratio. So firstly, we move to calculation for total debt ratio. In 2022, cash overhead and arrow overhead is 0.0919 and 0.3614 respectively. And for equity multiply for 2022, for cash overhead is 1.5427 and arrow overhead is 0.0020. For long debt 2022, for cash overhead is 0.0919 and for around overhead is 0.0020. Term interest earned for 2022 for cash overhead is 9.9459 and for around overhead is 0.0079. And second last is cash coverage. For 2022, cash global high is 39,376.9 and around high is 28,219.4236. And last one, debt to equity ratio. For 2022, cash group height is 0.1417 and around height is 1.7638. And now we move to investment decisions. So here have inventory turnover, receivable turnover, total asset turnover, fixed asset turnover, assets reinvestment ratio, and account payable turnover. So we move first to inventory turnover. For 2032, cash group berhad is 5.6319 and around berhad is 3072.4743. For receivable turnover for 2022, cash group berhad is 2.6987 and around berhad is 2400.8350. Total asset turnover for 2022, cash group Berhad is 1.0539 and Aram Berhad is 2400.8350. Fee asset turnover for 2022, cash group Berhad is 0.7231 and Aram Berhad 10.8909. And asset reinvestment ratio for 2022, cash group Berhad is 19,302.87 and Aram Berhad is 70,501.78. And last one, account payable turnover for 2022 for cash group Berhad is 11.0137 and Aram Berhad is 33,294.2995. Okay, for working capitalization have a three part. First is cash conversion cycle, second cash flow, and last one is cash ratio. So for cash conversation cycle for 2022, cash group Berhad is 166.9187 and Aram Berhad is negative 0.0053. For cash flow in 2022, cash group Berhad is negative 2332 and Aram Berhad is 18 sit for 9108. And last one, cash ratio in 2022, cash group Berhad is 0.3775 and Aram Berhad is 0.3434. So now we move to discuss how change in each component affect a company performance ROE based on trend analysis and benchmarking of the selected companies based on DuPont identity calculations. So we move to our continue calculation is for market capitalization value. So for cash, the market value was 0.3 million in 2022, increased to 0.66 million in 2021, and then decreased to 0.65 million in 2022. Meanwhile, for Aram, the market value was 0.59 million in 2022, followed by decline to 0.54 million in 2021, and further decrease to 0.52 million in 2002. And for earning per share, examine the cash and Aram for the year 2020, 2021, and 2022. We observe a positive trend in EPS for both company. For cash, the EPS value was 0.01 in 2022, reaching to 0.02 in both 2021 and 2022, indicating an improvement in earning per share over the year. Similarly, Aram display an upward trajectory in EPF, increasing from 0.05 in 2022 to 0.06 in 2021 and significantly raising to 0.11 in 2022. Okay, now we move to second last is profitability. So for return on asset, for the cash, the return on asset value exhibit an increasing trend over the year. with percentage of 0.0453 in 2022, 0.0825 in 2031, and 0.1053 in 2022, indicating improved profitability relative to total asset. Meanwhile, the ARAM showcased robust return on asset figure with percentage of 32.5593 in 2023, 36.0812 in 2021, and 57.6039 in 2022, demonstrating substantial return generated from the company assets, particularly notable in the most recent year. For return on equity, the return on equity for both cases around company reveal a notable upward trend over the year, indicating an improvement in the efficiency of utilizing shareholder equity to generate profit. In 2022, CAS achieved an ROE of 7.30%, which increased substantially to 13.75% in 2021 and further rose to 19.25% in 2022. Similarly, Aron experienced an ROE of 5.53% in 2020, followed by a rise to 7.08% in 2021 and significant increase to 11.76% in 2022. And for the last one, two-point identity. In terms of profitability, both CAS and ARAM have shown positive trend over the year. CAS experienced a steady increase in profitability with percent of 5.58% in 2020, 8.52% in 2021, and 9.99% in 2022. Similarly, RS demonstrates incremental growth in profitability, recording percentage of 1.82% in 2020, 1.83% in 2021, and 2.41% in 2022. For efficiency, analyzing the efficiency ratio for both CAS and ARM company over the year revealed a positive trend. CAS demonstrated a notable improvement in efficiency with rate increasing from 81.12% in 2020 to 96.67% in 2021 and further to 105.39% in 2022. Similarly, Aran showcased a consistent upward trajectory indicating enhanced efficiency level with percentage rising from 178,505.91% in 2020 to 197,310. DuPont Identity is a financial analysis tool that provides detailed insight into a company's financial performance. It breaks ROE into three main components: profitability, efficiency, and leverage. Understanding these components allows analysts to identify areas for improvement. Profitability is the ability to generate profit from revenue with a high profit margin, indicating high profit margin. Efficiency measures how effectively a company uses its assets to generate revenue, with a high asset turnover ratio indicating more revenue from each unit of asset. Finally, leverage measures the use of debt to increase return on equity with a high equity multiplier, indicating excessive debt financing. It only measures financial performance from the specific of shareholder. not considering the interests of creditor or employees. It can also be complicated to interpret as analysts need to understand each component to use it effectively. Additionally, the DuPont identity can be affected by factors beyond the company control such as change in economy or competitive conditions. Therefore, while DuPont identity is a valuable tool, it has its limitations.
Now let's move on. The other slide is about the importance of DuPont entity and their relationship to ROE of company QES Berhad and RANK Berhad. The DuPont entity is a formula that encompasses the return on equity of a company into three components: the net profit margin, the asset turnover, and the equity multiplier. It helps investors and managers to analyze the source of companies' profitability and efficiency and to compare it with other companies in the same industry. According to the latest financial data, the ROE of QS Berhad was 16%, while the ROE of RNK Berhad was 7.36%. This means that QS Berhad generate more profits for every unit of share equity than RM Berhad. Using the DUPA entity, we can in future examine the factors that contribute to this difference. QS Group Berhad had a higher net profit margin than RM Berhad, which indicates that it was more effective at controlling its costs and expenses. QS Group Berhad also had a higher asset turnover than RM Berhad, which means that it generates more sales revenue for every unit of asset. However, RM Berhad had a higher equity multiplier than QS Berhad, which implies that it used more debt in financing relative to its equity. Based on the DuPont entity analysis, my recommendation is that QS Berhad should maintain its high operating efficiency and asset use efficiency, while RM Berhad should improve its profit margin and asset turnover. Both companies should also monitor their financial leverage and ensure that it's optimal for their risk and return profile.
Now I'm going to explain about DuPont identity scenario. First, scenario 1. Changing economic conditions. Economic conditions can affect DuPont identity, potentially causing incorrect financial performance. Also, economic recessions can lead to a drop in profit margins, affecting the company's financial performance. Next, scenario 2. Change in competition. Regulation change favoring competing companies can decrease profit margins. This can also affect DuPont's identity. Scenario 3. Change in company strategy. Investing in research and development may initially decrease profit margins, but in the long run, it can improve operational efficiency and increase profit margins. And last scenario, scenario 4, accounting errors, mistake in cost calculation can affect DuPont's accuracy, causing the company's profit margin to be higher or lower. In conclusion, ratio analysis, DuPont identity are powerful financial analysis tools that can provide deep insights into a company's financial performance. Ratio analysis provides an overview of a company's financial performance, while DuPont identity provides a more in-depth analysis of the three key components that contribute to return on equity, or ROE: profitability, efficiency, and leverage. The study used ratio analysis and DuPont identity to analyze the financial performance of Malaysian companies. Key findings revealed that KS Group Berhad and Rang Berhad have a good financial performance, with a ROE of 19.7% and 14.2%, respectively, in by 2023. KS Group Berhad has higher profitability, a higher net profit margin, and higher efficiency, a higher asset turnover ratio. Additionally, key as Gruber had used higher leverage, a higher equity multiplier. These findings suggest that these companies are financially sound and have good prospects. However, a comprehensive financial analysis should consider various factors, such as economic conditions, competition, and corporate strategy. DuPont Identity is a crucial tool for comprehensive financial analysis, providing deep insight into a company financial performance by dividing ROE into three main components. It can be used to compare companies' performance with other companies in the same or different industries and track its performance over time. Overall, DuPont is powerful financial analysis tools that can offer valuable insights for managers, analysts, and investors. So that's all for me and our group. Thank you and assalamualaikum warahmatullahi wabarakatuh.